Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, everybody. Welcome back to another live stream. Hope you're all doing well. We are back in the markets ahead of GDP and unemployment claims this morning. Both figures set to potentially move the market. And there's been some interesting moves here overnight ahead of this news. What we're going to do here in this video or in the stream, as we always do, is we're going to prep for the news. We're going to talk about scenarios. We're going to talk fundamentals and technicals and do all the good stuff that we always do. If you're new to the show, let me just invite you to subscribe, hit the thumbs up button, and if you hit that notification bell, it will let you know when we go live so that you don't miss anything. So guys, we have GDP numbers coming out here in just about 10 minutes to go. Let me get my pen so I can draw some pretty pictures here. In terms of market volatility here, both of these numbers are set to potentially move pretty much everything, right? Gold, oil, currency pairs, indices, all set to move from these numbers here this morning. Now, I just want to say, for people who are trading gold and oil, like myself, this final GDP number is probably set to be a little bit more impactful to your trades. And if you're somebody trading indices, the unemployment claims might take center stage. Now, I say might to both of these because it's not cut and dry. News for newer traders is all about how shocking it is. Think about it at home. If something's happening in the news to actually get you to watch the news, it's got to be something meaningful. But most of the time, most normal, sane people don't sit around watching the news all day long, all the time. Some people do if they have nothing better to do, but the point is, usually it's shocking stuff that moves the markets. That's what I'm trying to get at. So when it comes to, in terms of the numbers here today, we're watching for GDP numbers, unemployment claims, both set to move pretty much all of the markets. I'll show you guys where I am positioned ahead of time. I currently have an oil long. I know Frank is also short gold. So we might talk a little bit about Frank's short. Who knows, maybe we'll see him on the show later or not. Either ways, we know Frank is short in the group from yesterday's stream. He has been short. He's in a really nice trade. And for myself, I am currently long oil as of this low. This has been a pretty big trade for me recently, but I have to add some transparency to this. Before this trade that I'm in now, I took 2 attempts to go long on oil. Both of them were not good. So my first attempt to go long oil, I think I was, I was long, and price ended up kept going lower. Entered again, kept going lower, stopped me out. So I took 2 losses before this one. However, the cool thing is that this trade right now is at one point was running, like some crazy risk reward, like a 9-to-1 or something like that. It's come back a good bit now to where pretty much it was yesterday, which was about a 6-to-1, 5-to-1, something like that. We're pulling back. However, I have not taken profits on this trade. I do have a trailing stop still going on this trade. So yesterday, for oil traders out there, we broke through this level of resistance. That was huge for the bulls. And quick high level reasoning behind, the quick reasoning behind this oil trade, high level, fundamentally, Russia and Saudi Arabia have both basically made it very clear that they plan on restricting supply. So supply is drying up. We're going into the winter months. The winter months call for more natural gas and more heating and more energy consumption in that regards. And so we have kind of a lot of demand and shrinking supply. So I looked for a long setup and I found it. So I took my fundamental bias that I also derived from the EDGEFINDER scoring, where we have this USO, this is US oil, right? So US oil, we have a very bearish reading. I've stayed bullish on this one for quite some time. And like I said, I took 2 losses before I caught this third winning trade. So ahead of GDP numbers and unemployment claims, I am long oil. I am holding this trade. And my plan is to stop out for a profit if price breaks through support. Now, before I move on to more assets, we are going to talk gold. We're going to talk the dollar. We'll talk indices. Before we do that, let me just remind you guys, if you're not already inside of our Discord channel, you can join. We have a couple things for you. Number one, here's our free Discord link. We're going to drop that in the chat. Now, if you guys would like to join the free version of the Discord to check it out, please do that now. It's in the chat as we speak. So feel free to join that. But I also want to say, if you are considering a membership with us, it is an educational service that we offer where you can see the trades that are being taken by Frank and myself. So like I said, Frank has a gold trade on, I'm trading oil. And if you would like access to these alerts when they're being sent out, you can do so by messaging our support staff on our website. Here's how you can do that. We'll drop another link here in the chat. This link will take you to a location where you can have a direct message conversation with someone on our staff. Click the link, go here. It will take you to this direct messaging center. Just fill out the form and you'll be able to have a conversation with our staff. Okay, so with that said, let's move on to some more markets. Let's talk a little bit about gold. I mentioned Frank has a short position on gold currently, and it broke clean through a level of support that, the bears really wanted it to do. So I'll show you guys where we're at price action wise. This level of support, this green zone, really should be red. Now, as we come into this news number here in a few moments, it's really, really important that we understand what this implication has. Understand something, guys. Gold trades off a lot of times off of fear. And if there is fears that inflation may remain elevated for some time, yet the economy starts to crack, that environment is where gold flourishes, because the central banks may need to back down from all their rate hikes, which would weaken the dollar, and a weakening dollar could lead to a strengthening gold market. Now, the reason I'll say all that is that we have GDP numbers coming out, which will give us in just a few minutes some core components to the economic readings in the US. How are things doing in the US? We're going to get that number in just a few moments, guys. Again, we are just about 3-4 minutes away from that news number. As I mentioned, we have GDP on the horizon, final GDP quarter over quarter coming out in 3 minutes, 40 seconds. So this will have a big impact on gold price. We're likely to see some swings here today. And, this is coming off a fresh sell. So is this just going to rally back, or is it going to keep going? Well, I don't know. The answer is the GDP number will probably give us a little bit of clarity. So I'll give you something here. If the gold market, basically, if GDP numbers come out here this morning and they are weak, like they don't look so hot, it is likely that gold could actually see some strength. However, if GDP numbers come out strong, it is likely to build confidence in the US dollar and the US economy, and a strengthening dollar means gold down. Okay, so we're going through fundamentals here today, but let's also talk technicals at the same time. Drawing a swing high to swing low here from this previous short little dead cat bounce that we got before a plummet through the lows. This puts into perspective a really interesting area. This 50% retracement, which lines up very nicely here with past resistance, could be, in my view, especially if GDP numbers don't look necessarily like they're weak at all, right? If they show some strength in the US dollar, it could actually be a great selling opportunity, in my personal opinion, to maybe even join Frank's trade. Now, Frank shorted gold inside of VIP up in 1925's range. So I'm super jealous of him. He is short from up here and has ridden this trade with a trailing stop since. Actually, I don't remember where this is, but Frank has been calling all that out in our Telegram, which is also free. So if you would like more information on some of our trades and reasonings. We'll also drop now in the description a link to our Telegram channel, which is actually free. So we put out some great free value there. So if you'd like to check out the Telegram, here's the link now. Click that link. If you have Telegram and you're not already in there, come join us. We put out some good stuff to cover all this. DXY overextended. Well, let's see. The dollar index, is it truly overextended? Well, in my personal opinion, from a fundamentalist perspective, no, it's not. The dollar can keep going much further than people think. And I can tell you that retail traders think confidently that this thing is overbought. Now, I'm not just saying that. I'm not just making that up to fit my own narrative. I'm talking data here. Let me show you. Retail traders, amateur traders, they are betting on a continuation of the dollar yen, right? Look at this. 75% of retail traders are shorting it, saying, hey, the dollar yen's gone up too much. It's got to come down now, right? Or they're buying the Australian dollar, the Kiwi dollar, the pound dollar, the euro dollar. They are betting against the dollar, right? Because they're long Aussie, Kiwi, pound, euro. They're short dollar. The point is, guys, retail traders are betting on this trend reversing, and it doesn't mean that the dollar can't reverse. I'm not saying it's impossible for it to reverse. By any means, this is not a perfect indicator. Retail sentiment is just one tool that I use in my trading, but it is important to pay attention to. When the retail traders piled into a trade, we have to be careful. Guys, I'm going to have to try and sprint here so that I can watch the news with you guys. We've got dollar index in the top left. We've got unemployment claims, and we have GDP numbers coming out in just a moment. We're going to clean up my charts here. We've got about 40 seconds. So let's see if I can get everything done here as fast as possible. So NAS, and we're going to put, I've got to put my oil trade on there because, again, I am personally long oil. And if this trade does go down, it's going to stop me out. Breaking news. All right, here we go. Coming in hot here. Let's see if we get some reaction. Dollar index initially making a slight tick up. And again, we will go check the numbers as soon as we get them. Markets are likely to make a move. There's gold slipping a little bit here on the 15-minute chart. Dollar index making a push slightly higher. US oil flat. NAS spiking back up here a little bit off the 15-minute. I would like to see indices make a push higher. I've got several options trades that would do quite well if the indices would push. So we'll see. Thank you very much. GDP 2.1, unemployment 204. Okay, so GDP numbers came out slightly cooler than what was expected. That potentially shows maybe the slightest uptick in gold in terms of bias, but it's nothing super shocking to the markets. Same thing with unemployment claims. Not really a tremendous difference from what was exactly expected. So we did get less people filing for unemployment. That's kind of dollar bullish. And we did get a cooler GDP number than expected. That's dollar bearish. What's the bias? Well, if one thing is kind of positive for the dollar and one thing is kind of negative for the dollar, we probably would expect some mixed reactions. And again, let's just see if that is the case. We're getting a little bit of a push to the dollar, but remember, these are 15-minute charts and these are not massive moves. So we're not getting a massive reaction by any means, but the dollar index is now kind of pushing lower here. And, I probably reacting a little bit more specifically to the GDP figure that did come out. Gold kind of likes it, right? Remember, we said a potential weakening in the economy at all could signal, the Fed may take a back seat for a little bit, and that could cause dollar to weaken. But it's not a massive move here. This is, let's talk percentages. That's 0.12% move on the dollar. So not really anything too tremendous. The NASDAQ is pushing here, which is interesting. Let's take a closer look at the NAS here this morning. Let's go over to NASDAQ, see what's going on. NASDAQ is fighting for life here. Here is your 1 hour chart view. You can see we've just been kind of back and forth. You might say, is this an inverted head and shoulders, Nick? Right? And sometimes traders will wonder, is this inverted head and shoulders? And in my opinion, when it comes to reversal patterns, you have to be really careful because reversal patterns can be really deceiving in terms of pure technical traders. Here's the thing. This is still level of resistance. Now, it would be more interesting if we got a breakout, because then it would kind of confirm like, hey, that actually is a higher low following a lower low, and that could signal a reversal. But we've got to see the breakout, right? We got to see a clean break through the highs. And if that happens, NASDAQ could look interesting for another push higher. So I am interested in NASDAQ. Like I mentioned, I have some options trades. I have long exposure essentially to the Dow US 30. I have exposure to sort of NASDAQ by proxy. I've got an ETF SOXX that I've sold puts on. That is a semiconductor ETF. So I've sold some puts on that. I've sold puts on the Dow, and I've also sold puts on silver, which is let's see what silver's doing today. Nice little round off the bottom. We'll see if that turns into anything. So yeah. Is this right now? Right now? Yes, it is. EU, please. We'll take a look at euro in a moment. Yeah, it can keep going if it's overbought. That is very true, right? Just because something seems overbought absolutely does not mean that it can't go higher. Nick, do you think Tesla's going to 150? I hope so. I have Tesla shares at, I don't even know what my average share price. I bought in March of 2020. I put 10% of my account into one of my stock accounts into Tesla, and it turned into quite a bit more, which was awesome. Still to this day, one of my P&L wise, one of my best trades. I have since sold a good bit of it, but still hold some Tesla in my account. Let's see, what else can we take a look at in terms of US oil? Let's see, is that impacting my trade at all? Like I said, stops will be trailed out here if we do break through support. Support looking left is right around here. We're looking for that to hold. As long as that holds, I'm staying in a bullish trade on oil. I do like the fundamentals there and the technicals as well. So I'm staying long biased on that. Let's take a look at gold here, guys. Gold trying to make that push that we talked about. And again, that weakness in GDP could drive gold higher here on the short-term basis. But again, sellers are still very much in control on this market. And so I'd be very cautious if we do get to that 50% retracement, which lines up with past support, to watch out, because bulls might get tired and sellers could come back in to push it lower. That'd be my opinion. Let's take a look at the euro. Euro pushing off the lows here. Euro dollar, I am generally pretty bearish on this pair. Is the question, a lot of people are going to say, is it time to buy the euro? Is it time to short the euro? And so I am predominantly a swing trader. The reason for that is that I have a busy schedule. Like I'm sure many of you guys do. Like I don't have like the whole day to look at trading charts on like the 15-minute chart or anything like that. Not anything against people who do trade that way, but for me, I'm looking for kind of like bigger moves that I can execute on and then kind of let them play out. So what I'd be interested in for euro, deeper pullback up into that 50 to 61.8% retracement. That's past support that really held for quite some time. And then when it fell out, the floor fell out beneath it. So in terms of euro, the interest for me would be, I do like this downtrend, but I've got to see the pullback. I know a friend of mine who, some of you guys might know Joe from Elite Traders. He is short on euro. He's got a great trade going on. Shout out to Joe for that one. So yeah, really, really interested in the euro myself, but probably only on a pullback. We do have confirmation from the EDGEFINDER. If we take a look at top setups right now, the algorithm's got euro dollar as a bearish setup. Same with pound dollar, same with Aussie dollar, and short biased on the indices at this time. So in terms of a short-term kind of positioning, the S&P and the Dow look weak. NASDAQ also looking weak. Gold still bearish. As I mentioned, pullbacks could be interesting on the sell side for gold. I'm still bullish on oil due to the EDGEFINDER's reading here, right? So we take a look at, so my process for finding trades, guys, I look at the charts and I see kind of what's moving, and then I align them with what is actually being confirmed from the EDGEFINDER. So most of my trading involves the EDGEFINDER's algorithm, which sources a ton of data for you, especially if you're somebody who's like, okay, I like fundamentals, but I don't know how to incorporate them in my trading. The EDGEFINDER is pretty much pre-built. It's an algorithm that sources a ton of data automatically. So pulls this data into its system. And then what it does next is it looks at that data and it interprets it according to a set of calculations and rules that we have programmed into the tool. So it takes into account inflation figures and GDP statistics like we just had out of the US. And it takes into account unemployment, like labor statistics and interest rates. And it pulls all of that economic data in there, and it gives us, it prints out, punches out like a card, a bias to consider. And that's how I use the EDGEFINDER. So I use, I do, of course, do a lot of fundamental analysis still manually just because of the role that I'm in. But the EDGEFINDER automates a ton of the data sourcing as well as the interpretation of the data. So that is why we've built it. That is why our company is that's our primary product. We sell copies of the EDGEFINDER as a way for traders who are looking to incorporate fundamentals to get that extra edge, that extra confirmation in their trades. So many traders look at charts and they only pay attention to charts. And if you're good at technical analysis, that's great, but you might be missing some of the key market drivers, which is fundamental macro movements. The market does not move just off of drawings and price movements around, right? The market moves based on real world implications. So like oil supplies, how is that going to move everything else in the market? What is the Federal Reserve's interest rate? How is that going to impact your oil trade, your gold trade, your dollar trades? How is it going to impact it? The whole point of the EDGEFINDER is to help automate that incredible duty of sourcing data and creating kind of a bias for you. If you'd like a copy of the tool, I'm going to drop a link here in the chat to where you can send a direct message to our staff. We do have people on deck in the office here. Again, like I said, we're a software company in Atlanta, Georgia. We build tools for traders. And if you want a copy of the software that Frank and I are using in all of our trading, get it now. Send us a direct message. Click this. If you click this message or click this link, it will take you to a center where you can have a conversation with someone on our staff about the tool, about the products that we offer. And we can give you some examples. We can give you a tour of the software, and we can give you some streamer discounts. So if you're a subscriber here, message, let them know. We'll give you an extra discount off of the product. So check it out if that's something that you're interested in getting a copy of. Anyways, like I said, GDP numbers were lower than expected. Unemployment claims were also lower than expected. So a little bit of mixed sentiment on the dollar. However, markets seem to be slightly pushing lower on the dollar index, or at least they were a moment ago. We've recovered a little bit of that. Here's the 1 hour chart. This is kind of an as expected candle, right? We had some mixed sentiments from this the news data that came out here this morning. Again, GDP numbers cooler, but unemployment claims a little bit better than expected in terms of people filing for unemployment. So some mixed sentiment from the dollar index. Yeah, not going to mess with the dollar strength. Yeah, no, this is a tough one, right? This is a tough one for me to be short biased on because this thing is in a roaring uptrend backed by fundamentals. So I'm going to be really cautious to try and be short the dollar at this time. Again, guys, I mentioned it a second ago, but just in case you didn't see the message, we just dropped a link in the chat. If you would like to get in contact with someone from our team about a copy of the tool, please feel free to do so there. And we'll give you that extra streamer discount if you are here with us live. So yeah, check it out. Yeah, really interesting moves here in terms of the dollar here this morning. Again, kind of center stage is that GDP number. And we'll see how this continues to impact markets. In just a moment, we're going to bring in Frank, who has his own gold trades, as we mentioned earlier. He's been short on gold, and I think he's probably still in the trade, but we'll ask him in just a minute about how this GDP number, if at all, impacts his gold trade, and then we'll say hello to him. So let's just roll a quick break, thanking our sponsor, and we'll come right back and ask Frank those questions.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partner broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, we are back with Frank. Hey, Frank, how's it going?
Not much. How are you?
Good, I'm good. So, Frank, we had GDP numbers come out slightly less lower than expected. We had 2.1% compared to the forecast of 2.2%. And final GDP price index quarter over quarter also came out lower, 1.7% compared to the forecasted 2%. What do you think about this, and does it impact your gold trade at all?
Yeah, so I kind of like this right here. Yesterday, I was talking about hoping to see lower GDP numbers, and so seeing that GDP has come down for I think the fourth straight month or the third, shows steady decline in output. So I think that's good for the indices at least. So I'm hoping I'm looking to take a long trade on the NAS or the S&P soon.
Mm,
Just hoping that it will hold this level above, I believe it's 14,500 something, somewhere above
mhm.
here. If you can hold this trend line, I'd be happy with it. Just to maybe test a long trade there, but yeah, also hoping my gold trade trails out soon, just so I can potentially look for longs in the gold market too. Um,
Mhm.
as far as unemployment claims go, I mean that's good for the dollar to see less claims. So I think the jobs market is still kind of resilient just because of the previous NFP reports we've seen. But I think GDP, this quarterly news is pretty impactful as well. So hoping to look at long trades on indices here, potentially gold. That's not taking away from dollar strength really. But hopefully we'll see some moves to the upside for the indices at least because of the harsh sell-off we've been seeing in the past week. So still holding Kiwi Swiss as well to the short side, but price has been moving against me this whole time. So hopefully um, we'll see some pullback here. But if not, I guess I'll just get stopped out. But yeah, still in the gold trade, still trailing it. If it doesn't hit my stop, I'll just keep trailing. So yeah.
Frank, if you pull up gold, I'm curious what your chart is looking like. Um, so you're short gold still. Look at that. That's a wild trade. Is that green line is your trailed stop?
Yeah, this is the trail. So I'm probably going to go a little further. It looks like, so we're testing the lows again.
Mm-hmm.
Breaking under that probably will mean another trail. Um, but yeah, gold is just looking so weak right now. Um,
Yeah, that's a phenomenal trade. I mean, that at that point is like a several risk to reward. I mean, this was like a 5 or 6, which is wild. So, congrats on your gold traded. And what, I think you're right to be cautious here as you get that big slide to the downside. I mean, like you said, we're back to the lows here on gold minutes after the GDP numbers came out. And I think you're right to be cautious with that trend line, the lower trend line that you've got there, and gold does look a bit extended to the downside. Not necessarily saying that, we think we're, going long right away, or we think it's like immediately going to bounce, but I think it's a safe call to kind of trail that stop. And if it keeps going, great. And if it doesn't, you're out of there. So
yeah, so
fair
I'm
enough.
I'm pretty happy with it so far. But looking at the indices too, they're just not really complying yet. So maybe we'll see something here soon, but just
Cool. Yeah, well,
lots of
we'll have to get you back on for another segment to go over the indices. We've got Miko coming on behind you. Just before you go, I just want to remind everybody, if you would like to see the trade alerts being shared from Frank and myself, you can join them inside of our Discord channel. We've dropped a link in the chat earlier, but two things for you. We have a free Discord channel, which will drop now, and we also have our VIP trade alerts, which you can sign up for by sending us a direct message on our website. That link will also be in the chat right now as we speak. So, Frank, thank you for coming on the show, and we'll see you back next time.
Yep, thanks.
All right. And now, guys, we're going to bring in Miko and go right to him with some technical Thursday setups. Hey, Miko, how's it going?
What is up? I'm doing good. How are you, Nick?
I'm good. I'm good, and it's good to have you back on the show. This time, no Marco, unfortunately, so it's just us. But I just asked Frank to go over his gold trade, and I'm curious to hear. Do you have any trades open? What are you looking at? What's kind of on Miko's watch list today?
Yeah, so I haven't actually taken any positions for a while. The markets have been bleeding a lot, and I'm typically the type of guy who looks for some bigger pullbacks. Haven't really seen that across a lot of the dollar pairs, which should kind of be my main focus over the past kind of week or so. So I haven't managed to find any trades, but I do like what I see in the market in terms of all this momentum. EURUSD, this looks like it's still got some more downside in higher time frames. This is still looking very, very bearish as well. So I do think EURUSD can still keep pushing. I'm just looking for pullbacks essentially. So I'm looking for price to come back and retest some areas. I was speaking a lot about this area here this week. So around 1.06, if you can get some retracement up there, I'll be interested short. Pound USD, similar situation as well. This one's been falling to the downside quite aggressively. So my plan is basically just look to keep attacking to the downside essentially. Once I see some decent pullbacks.
And Miko, real quick, if you'd like to share your screen, we could take a look at your charts as well. I'm sure you've got some markups. Everybody,
that is poor.
You're all good. As you do that, euro and pound look really interesting. So we'll see how they go. But yeah, we got your screen now.
Okay. So I'll quickly just rehearse what I said. So basically I said dollar pairs looking very weak. So Euro USD, if we can retrace, that'll be fantastic. Pound USD, if we can retrace, that'll be fantastic as well. Obviously, you guys were just touching on gold as well. That one's looking very, very bearish at the moment. So again, if you can get some nice pullbacks for gold, I can still see some more downside for this one as well. Looking to the left, there's some areas where we could revisit as well. So my kind of narrative is basically looking to short these dollar pairs, expecting dollar to be strong. Yen pairs, I do like some yen pairs, but I'm a little bit on the fence with yen in general because some yen pairs look a little bit bullish, some look a little bit bearish. But in particular, I quite like pound yen for some sales as well. Coming to this level, not too far away. And I like Swiss yen as well. That one can start pulling back as well. So my main kind of thought process is looking for more dollar strength and more downside for the dollar pairs in general.
Yeah, I feel like Miko right now, between the technicals and the fundamentals, both really looking, dollar strong, right? You mentioned euro dollar, pound dollar, Aussie dollar, lots of these currency pairs with the dollar in them. The dollar is just dominating right now. And it's one of those things where I think it's one of those weeks, I guess, where a lot of things have made their moves and a lot of traders, I feel like this is where a lot of people mess up. That a lot of people start chasing, they start trying to fade this move, they start making like rash, decisions on these dollar movements. And I'm with you. I think the trade, at least right now, is continued dollar strength. But what that sometimes means, and people don't like this answer, is you got to wait. You got to be patient enough to actually take the trades when you're supposed to. Just because you're bullish on something doesn't mean you go buy it right now, wherever it's at. You look for opportunities that, diminish your risk while maximizing your reward. So, take your pick, whether it's euro, pound, whatever it is against the dollar. I think the dollar right now, the story is very strong. And just to layer on, the fundamentals, the central banks are diverging quite a bit. You have the central bank in the US, which is pretty hawkish, meaning they're planning on keeping rates very solidly high. And then you've got the Bank of England and you've got the ECB, which are both far more on the, not necessarily outright dovish, but they're far more dovish than the central bank here in the US. They're mentioning like signs of, being careful about possible recession. And, we don't necessarily see going much higher with rates. And that's a very different language than the Federal Reserve. And I think it's reflecting now nicely in the trends that we're picking up on the technical side. So, that is an interesting kind of dynamic to watch play out. So what I like about it too, Miko, is that, some of the really beautiful trends that have occurred on the pound against the dollar, for example, in 2022, it was kind of a lot of what looks like today, right? Very hawkish, US dollar, just bullish, and the pound was getting beat up. Then there was 2023 where the trend reversed and fundamentals kind of aligned, and we got these beautiful uptrends for a while on euro and pound. And now it seems like we're back to dollar strength. So it's interesting just the way the currency world works. But seems like we're, for now, back to dollar strength until further notice. So Mika, what do you think about, seasonally, September is typically a little bit of a risk off month. We typically see dollar strength. We typically see indices weakness. I guess as you go into the end of your year, any other major charts that you're watching? I know you mentioned some yen crosses. Also, how would you play gold, right? So gold is sold off quite a bit. Give us a little bit more on the gold side. I'm curious to see what you say there.
Yes. So yeah, I'll touch on gold first, and I'll go through a couple of pairs after. But yeah, I mean, my kind of outlook on gold higher time frames is like gold's almost stuck in a range in a little bit. We've got this infamous resistance up here, which price has had a pretty nice rejection of again for the third time. So, if this keeps up, there could be a lot of downside for gold longer term potentially. There's a big level here, and there's also a big level here as well. So I'm looking at the higher time frames, and I do this on other dollar pairs and pairs in general, just to see what the overall scope is for the market and where potentially we can go longer term. And with gold, if we maintain this rejection, it wouldn't be so crazy to say that gold potentially could come and start ticking off these levels here. Obviously, fundamentally, things could change and things can come into place. But from a technical standpoint, we've got a ranging gold market in the higher time frame. There's not such an outlandish statement to say gold could start coming back to some of these areas. So my kind of thought process for gold, certainly with this momentum, certainly the fact that we're starting to take out these lows now, it just basically look for some pullbacks to short this to the downside. And the most realistic places I can see, well, this is probably my preferred place. This is my preferred place. And I'm not too sure if gold will pull all the way back up there. It would be very, very kind of gold if we were to see such a move, around 50% of that bearish leg. So that's my ideal situation if gold was to pull back to this area. But with the current kind of conditions of the market, areas kind of falling out the sky a little bit, we may only see a retracement to this area here as well. So I'm going to be focused on both these areas. I would prefer taking shorts there, but if things look good on a retest of 1885-ish, this low here, I will consider shorts as well. And yeah, I'll be looking for some entries, candlestick patterns, how I get involved in my market for my confirmations. And I would either, let's say we trace from here, so I would either place my target back at the prior low, or if the risk reward not that favorable, then I would look at my extended targets on the higher time frame. So that's kind of my thought process with gold. Simply just, we've had an impulse, now I'm looking for correction, now I'm looking to set it back down again. And kind of the same thing for a lot of dollar pairs as well. High time frames, you were mentioning that 2023 we saw a lot of pullbacks, not necessarily pullbacks, but we saw a reversal in that trend. And if you look at the higher time frames like pound USD, we'll look at euro in a second. We've had this very big move 2022, and now it looks like we may have had just a very, very, very big pullback potentially. This could be another low high, could see another move to the downside. Same thing for euro USD as well. We've had a big move to the downside, potentially could be a pullback. We could be seeing price revisit some of these areas longer term. So I'm very bearish on the dollar pairs, which is why I'm just looking for some pullbacks to short. Yen pairs a little bit. I'm still overall bullish on the higher time frames. If you look at the monthly chart, everything is still pushing. So my thought process with yen pairs is longer term buy, but some yen pairs are kind of moving sideways in the 4H, which is the time frame I'm looking for my setups, and then hourly I'm looking for my entries. So I'm kind of staying patient. Euro yen's been moving sideways as well, so I'm kind of waiting for some momentum to come back like we're seeing with the dollar pairs. Then I'll look for some trades, but that's kind of how I'm looking to approach the end of the year, I would say.
Perfect. Yeah, no, thanks for laying that out. And I liked your gold analysis a lot. It was, you made that point. The higher time frames are important to pay attention to, and understanding. I always like that you bring that up, Miko. I think a lot of people neglect like the higher time frames, like the weekly and even like the monthly chart, to look at like long term. What is a reasonable like destination that gold could make its way to? And gold is one of those things. It can range for a very, very long time. And another thing about the currencies is that they're unbound. They're not necessarily if you, in the next 20 years, the dollar against the yen could be at the same spot where it currently is. Whereas, you look at gold or stocks on a very long-term basis, they're very unlikely to be at the same place in 20 years. That would be actually, if they're at the same place in 20 years, we've got really big problems. So we'll have to see. But yeah, no, a good point there with the dollar, especially. You know, I'll know that we've really seen dollar strength when, you know, the euro is tapping back on the door of parity like we had back in 2022, which was just wild at 1.0 exchange rate. I knew a lot of people in the US who were making travel arrangements during that time because the dollar was a lot stronger over there, so they were able to do some vacationing. So maybe we'll plan a trip in next year.
Yeah, hopefully.
Yeah. Anyways, Miko, I want to thank you for coming on to the show as always to do some technical analysis with us. If you guys don't already have Miko on your YouTube subscription list, make sure to do so. We've got his link in the chat being dropped right now. Check him out. He's got his own YouTube channel where he goes through stuff. If you enjoyed his commentary and you want some more stuff from him, that's a great way to do it. Subscribe to Miko on YouTube, and it's just Miko Audu, and you can find him there. Miko, thank you very much for coming on the show, man.
Thank you, Nick.
All right. We'll see Miko back next week. He comes on every week on Thursdays. We do a little bit of segment together, just a little bit of a collaboration for the channel. Always good to have all of our guests on, and we do appreciate all of their help in making the show what it is. And we also appreciate you guys watching the show. I know a lot of you guys are regulars. Do me a quick favor and do the producers a favor who work so hard behind the scenes to make the show what it is. Let us know you're here. If you're somebody who watches on a regular basis, type in the chat, I'm here. Let's just blow up the chat for a second. It's just cool to see all the regular people here. We've got a good number of viewers here today. And while you do that, I do want to just remind you that if you want a copy of the EDGEFINDER, or if you'd like access to our trade alerts, remember, stream viewers get discounts. Direct message us. We've got a link. We'll drop it in a second because you guys are about to spam the chat. But remember, you can always go to our website, a1trading.com, live chat with us, and let us know that you're a stream subscriber, and we'll give you discounts. We give product discounts to our viewers here on the show. We do really appreciate you guys for being here. Lots of people in the chat lighting up the chat saying, I'm here. I'm always here. I'm here as usual. Lee, what's up? Gren, Pies, Musa, Jide, Jesse, Cyprian, Kyle, Giuseppe, Sam, Leno, Future Trading. What's up, guys? We appreciate you. We really do. Guys, that's going to wrap up the show here today. Remember, like I said, discounts available. Link will be dropped in the chat now. Message us. Come join the group. If you're not in there, continue the conversation with us. I know a lot of you guys are stream viewers. Come join the Discord as well. I'm telling you, it's worth it. If you get this much value out of the streams, which are free, I promise you, there is more value in the Discord. Come join it. Get a discount. Find us on the website. Thanks, guys. Have a great rest of your day, and we'll see you next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with ACAP, you can get tools like the EDGEFINDER completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.